Thank you very much, Mr. Dimon. Thank you for voluntarily being here. You responded to someone's question earlier describing the things that are good about smaller institutions and things that create problems in larger institutions. I don't have that list in my memory yet, but hubris stands out, arrogance. How do you manage a company the size of J.P. Morgan and overcome that list of adjectives that you described are just a natural occurrence within a large organization?
Well, they can occur in small organizations too. You know, look, we hope we have very good people.
And you aren't talking about the Senate, surely?
No.
Okay.
Definitely not. Not now. Look, I think all companies want to have great employees, open, always analyze things, always challenging yourself, always learning from your mistakes. That people are very honest all the time, that you share reports. So I think there are ways you can avoid the negatives of being a big company. And so hopefully we foster the right kind of culture at J.P. Morgan. At J.P. Morgan, we do believe we're in business to serve clients. That is job number one. And we do it every day around the world in 2,000 communities around the world. And we hope our people believe that. And that's in their hearts to do the right thing every day the right way. We ask them to treat people the way you would treat your friends or your parents. We ask them, if you see a problem, you think is going wrong, raise your hand and call the right people. And we have constantly tried to improve our products and services. Sometimes, and we try to acknowledge legitimate complaints. There have been a lot of legitimate complaints about some banking products and services. We try to acknowledge them and fix them.
Well, Mr. Dimon, how you manage J.P. Morgan really is the business of your board of directors, your shareholders. But it does have consequences to those of us who believe in a free market system, its value, its merits. I hope that I have the sense, and I hope that it's the case, that that's a responsibility that you understand in protecting this American free enterprise system, how J.P. Morgan and every other company, large or small, conducts themselves, what behavior they exhibit, really matters in our ability to be an advocate for a free market system that creates jobs and economic opportunity and allows Americans to pursue the American dream. Anything I'm missing here?
I couldn't agree more.
Let me ask a more specific question. Our ranking member, Mr. Shelby, Senator Shelby, talks often about sufficient capital as the greatest deterrent toward too big to fail, toward systemic risk, and I certainly agree with that. One of the other components that is involved, I think, in trying to make certain that the taxpayers are not responsible for the demise of a company like yours, a financial institution like yours, is the living will. So-called living will. Would you describe to me what process J.P. Morgan has gone through to develop that living will, how transparent it is, what role the regulators play? Right. What evidence, if we saw the living will developed for J.P. Morgan, would give me or others satisfaction that your company can be dissolved without a call upon taxpayer dollars?
I think I would agree with most of the people here. We have to get rid of anything that looks like too big to fail. We have to allow our big institutions to fail. As part of the health of the system, and we shouldn't prop them up. We have to allow them to fail. And I go one step further. You want to be sure that they can fail and not damage the American economy and the American public. So a big bank, you want to be in a position where a big bank can be allowed to fail. I wouldn't call it resolution. I think it's the wrong name. I think it's called bankruptcy. And I personally call it bankruptcy for big, dumb banks. I think when you have bankruptcy, I'd have clawbacks. I'd fire the management. I'd fire the board. I'd wipe out the equity. And the unsecured should only recover whatever they recover like in a normal bankruptcy. This resolution authority, which starts to put the structure in place, and the living will, is, to me, what it means is giving information to regulators. They know how to do it. We do operate around the world. It's a little more complex. Remember, the FDIC has taken down a lot of large banks without damaging the American public, including WAMU many years ago, Continental Illinois. You may remember American Savings Bank. It's a little more complex now. We have to update it. So they need to know what happens to this legal entity, what happens to that legal entity, what are you going to do if this thing happens? And we've actually filed recently a analysis and report how they would go about dismantling a J.P. Morgan that didn't cost the taxpayer. We're also in favor of one other thing, by the way, which is that if the FDIC ever puts money into this bank, and I think the bank should be dismantled after that, and the name should be buried in disgrace. So there's a little Old Testament justice here. But after, even if they ever cost the FDIC money, like today, that should be charged back to the other big banks. So today, we pay for I know it's in a government program, it's paid for 100% by J.P. Morgan. During this crisis, we'll pay them $5 billion. So we're paying the FDIC. I think it puts a hell of an incentive on the other big banks to collaborate and make sure rules are in place that we don't jeopardize each other.
If JPMorgan became a big dumb bank and was in serious financial difficulty, is your sense that it would be, you don't want to use the word dissolved, it would be, the circumstance would be concluded with JPMorgan's demise and no cost to the taxpayer?
Yes.
Thank you.
That's the objective, yeah.